What's up guys, it's the Dragon. I'm back today with another video. So in today's video, I'm going to be using something which is said to be an 100% win rate strategy in conjunction with another strategy which is quite high win rate. And finally, we're going to be testing this on a small account. So an account with only $100 in there and theoretically seeing if this 100% win rate strategy is actually going to produce results. Now, obviously I have to disclaimer this video by saying no strategy is 100%, so you need to be incredibly careful. You need to do your own research before taking any bets or investments. There's always a disclaimer in the description, guys. You should always follow that. When it comes to making investments or trades, take advice from a professional financial advisor, and everything I say here is for educational purposes. So with all that said, let's get into this video. So the betting strategy which we're going to use is what's called a Martingale strategy. Now, I actually was inspired by this video, so I'm going to drop a link in the description. Effectively, the way this works is, let's say I have this £1 coin right here. Since most of my viewers are probably American, I'm going to say $1. Let's say I have $1 right here and I'm betting against someone, right? I'm going to flip this coin, and if it lands on heads, then I make $1, and if it lands on tails, I lose $1, right? So let's say I flip it, it goes against me, I lose $1. The next time we do this same bet, we are now going to up the stakes. So if it goes against me, I'm going to lose $2. If it goes for me, I'm going to gain $2. Let's say I lose again. Now we're going to up the bet again. So if I win the bet and it lands on heads, I'm going to make $4. If it goes against me and I lose the bet and it lands on tails, I'm going to lose $4. Now, the reason why this strategy is said to be so powerful is that it effectively creates a scenario where you have to keep losing many times in a row in order to lose your money. However, if you win only one of these bets, you will make it all back and then some. So for example, if I had won that $4 bet, right, I would have made $4, which pays back for the $1 and $2 which I just lost, which came to a total of $3. Now I just made $4, so I'm already $1 in profit and I only won $1. And that's a betting strategy rather than, like, obviously a chart strategy with confluences and indicators. Now that is a strategy which is said to be so effective because what actually happens is you end up with a situation where it's highly mathematically improbable that you're going to walk out with a loss, right? So let's say I did this strategy with $10,000 in my bank account. What would actually happen is I would need to lose 14 of these coin tosses in a row in order to blow my account. And I only need to win one to make all those back, by the way. Now, this is a 50% chance, so that's incredibly unlikely. In fact, I ran some calculations. It literally comes to 1 in 16,000 chance that you are going to lose 14 coin tosses in a row. Now, that might sound crazy considering the number's only 14. That's maths for you. When you involve powers, things get crazy really quick, right? So it's 0.5 to the power of 14, which comes to 0.006%, which comes to 1 in 16,000. Absolutely incredible. So what we're going to do is we're going to utilize this strategy on a small account. Secondly, I'm going to show you guys the confluences we're going to be using to place trades, and we're going to see after that how this actually plays out. Will this strategy work or not? So guys, what I've done here is I've gone on the Great British Pound to the US dollar Forex pair, and I'm going to use a simple third touch trendline strategy. Now this strategy, surprisingly, remains profitable even to this day. So I'm going to show you guys basically how it works. So what you'll do is you'll go on the Great British Pound and you'll take a trend line, and very simply you will draw this from the first to the second touch, and then you will identify where the third touch occurs and see if, and you will take a bet there, and if the price bounces, obviously you'll make money. Okay, this one's gone wide, so we're not going to take that bet. We're not even going to look at that. Let's take another example. So we have this right here. All right, so having drawn this one is sort of an iffy trade, so you would have made your entry right here. It sort of slid under here, but if you would, let me show you guys exactly what I mean. If you took this bet right here and you put your stop loss here, then you would probably have been taken out, but it's a bit of an iffy trade, so I'm just going to count that as a loss to be conservative. Now let me show you another example of this same strategy. Let's say we take this bet. Let's say we draw this trend line from there, and then we go through there. And as you guys can see, so first touch, second touch, this is the third touch. It just touches the trend line here, and then it blows on upwards to this huge rally right here. So that's effectively how this strategy works, right? We've had one win and one loss, but obviously the win would have made us way more profit than we lost in our loss. So that's essentially how that works. But enough of that, we're actually going to test this in live time right now with the Martingale strategy. So what I'm going to do is, because we're assuming we're working with a $100 account here, we're going to use micro lots, which means that for every pip that this moves, we're going to make or lose 1 cent. And this is how you want to play it with small accounts, especially if you're starting out, right? So if we do it with $1, then we stand a chance of blowing this account really quickly. So when you're using the Martingale strategy, obviously you don't want this. You want to start off with some smaller numbers and then work up from there. You can adjust your risk depending on how things actually play out. So we're going to start out like that. Let's see how this goes. Let me open up a spreadsheet and then, right guys, let's get this started. So right now, let's take a quick look, see where we have some touches of our trend lines and see if anything's going to come up. So right now I can immediately draw this just in case the price comes this low. Secondly, we could draw a line right here, but this is far too steep, so I'm not going to take this line very seriously. If it touches this, I'm not going to take it all that seriously. Let's see what happens to the price. So it's coming down, getting close. It basically looks like it's going to touch this, and I'm not going to take a bet. Guys, if I take a bet, by the way, I'm going to say it like before the price touches my entry, right? So I'm going to make it clear. But yeah, we're not going to take a bet here. This trend line's far too steep. I don't want to take it seriously. Right, so far, guys, the price has basically just shot upwards. We're seeing a fairly steep trend line touch right here. We can probably count this as the third touch. Unfortunately, it's bounced really fast. Right, it's come back down, guys. This is the point where we have to consider. Should we take this trade? It's a little too steep for me. I'm going to sit out of this one again. And now that it's slipped through and jumped up and retouched, guys, I finally think I'm going to take my first trade for this bet. Now, obviously, we're working on the 4-hour time frame, and it seems like we waited a long time for this trade. But remember, in real life, you'd be trading a lot of different pairs with this strategy, right? So this trade has come here. I'm actually going to take this bet. We're going to measure out our risk in pips, and we're going to see how this plays out. To enter here, we're risking 99 pips. I'm going to put my stop loss right below this region. Let me show you guys exactly how this trade is going. So our stop loss is going to be right here, just below this region. We're going to put our take profit approximately up here, and we're going to see how this plays out. Remember, we're doing micro lots, so we're risking 1 cent per pip, which means that this trade is risking 99 cents. Let's see how this plays out. Looks like this one stopped us out, guys. So let's take our loss right here, 99 pips, and we lost 99 cents. So far, it's not going great. So now we're going to have to run 2 micro lots in order to make up our money. And that's how we're going to play it from here on out. So the price has already made quite a sharp descent. We're going to move this back. It seems as though we've actually found immediately another place where we can enter. What we're going to do is we're going to wait very briefly for some confirmation. And then if we see some confirmation around here, we're going to immediately take this bet. So the price has slipped through, but not by far. Price has slipped a little bit further. I'm looking for confirmation here. If this can jump up, then we're going to take this bet immediately. All right, we're taking this bet. So let's take a look and let's see how our risk reward is looking. So 1.3772, and we're going to put our stop loss a little bit below, so 1.3709. And so we're risking 63 pips, and we're using 2 standard lots, which means we're actually risking $1.26. So let's see how this actually played out. Let's see if this trade works out for us. We're going to put our stop loss around here. Leaves us with risk reward of about 1 to 4, which is fairly possible. Let's see what happens. And guys, it looks like it's blown through our take profit. I can't lie, I was a little bit nervous for that trade. So that means we've actually made a profit of, let's go ahead and calculate these pips out. Right guys, we made a profit of 207 pips, 2 micro lots, which means that we've actually made a profit of $4.14 already. So far it's now switched and it's going pretty good. So let's just write this in our wins column right here. This is just me doing my little calculations right there. Guys, what I'm going to do is I'm going to run this a little bit longer. You've seen exactly how I'm doing this. We're going to come back after a few more trades have been taken. We're going to take about 10 trades and we're going to find out what actually happens to this account. Alright guys, so we're 9 trades in and I've just taken a big W, a big win. All of the ones up until there were some big losses. So far, I believe, I haven't actually added it up, but I believe it seems profitable so far. However, what I would say is if you're doing this strategy, you have definitely got to have nerves of steel, because this is probably one of the most stressful strategies I've ever tested. But I'm just going to quickly run you guys through what happened and let's see if this was profitable so far. So you guys saw the first few bets, and then what's happened here is we've had 1, 2, 3, 4, 5 losses in a row, each time doubling the risk, right? So in total, I lost around like $17 there. And then we've gone ahead and then the next lot size as it doubled, right? So the last one we did was 32 lot size. The next one was 64 micro lots. And that one, it was actually a win and we took profit relatively quickly. And we've made ourselves $54 in one go. So the Martingale strategy is certainly doing its thing. Like, I made one win and I made all this money back. However, for an account which is only $100 in size, like, you would have to have some serious grit to sit through like a 20% or so drawdown and just be still comfortable betting even more. So let's tally up over this very, very short back test and see if for this little period of time, this strategy was profitable. So guys, it looks like in total, we lost $22.22 and we made $58.54, which puts us at a profit of $36.32, which is a 30% return on our account, or 36 or 36% return on account, which is pretty good. So my takeaway from this strategy is this: considering I was able to lose about like 5 or 6 trades in a row and then make it all back, it seems pretty good on paper. However, I seriously doubt many people would have the emotional grit to actually follow this strategy through. I think to be able to do this strategy profitably, you need to be willing to blow your entire account. Like, you need to be willing to do that. Because if you're not, then you're probably going to cop out at the wrong moment. And when you do have that winning trade, you're not going to have doubled your stakes and you're just not going to make all your money back. So that is my conclusion, guys. I think the strategy is profitable. Of course, we only backtested for 9 trades. It take quite a while to properly backtest it up to 100 trades. So I just want to do this like a quick challenge for YouTube. It seems to have worked admirably well. So I would say it depends on your temperament. And it depends how much you're trading with. If you're trading with an amount you can afford to lose, then maybe this would be a good strategy for you, perhaps. But obviously, if you don't have the temperament where you can lose a lot of money, you're trading with like a savings account and you've got like 10,000 in there, then this strategy is going to be very difficult for you. And maybe then it'd be a far more difficult strategy to make work successfully for you. So yeah, guys, I hope you enjoyed this video. This was actually super interesting. And I might actually take what I've learned from this into my own trading somewhat. But yeah, make sure you guys drop a like, subscribe to the channel, turn on notifications, and I'll see you guys in the next one.